Remember last week? Let's check in with last week. Last week I talked about some October being the beginning of the fourth quarter. And the fourth quarter that looks very, very green, not only in October, but November and December as well. We talked about a few stocks for October 1st. And so I talked about Nvidia, I talked about APH, I talked about Bank of America. What did these all have in common? Well, they are all bullish charts, seasonally bullish, that started on October 1st. And they had varying degrees of how long these patterns last. All right, the soonest was 48 days, and the longest was 56 days. So they weren't really that much far apart. They all end at the beginning, the middle of December. They also all had 9 of the last 10 years where the bullish pattern worked during this time frame. Okay, so here's the thing I want to look at. I want to check in on them and see where they are, not even being a week into their patterns. So looking at Nvidia in the last week, it's up 4.32% on the stock price. Looking at APH, well, it clocked in just not long ago above 124. That's about a little bit more than 1% move on the stock in the last week. And then there's Bank of America. Bank of America is actually down almost $2 in the last week. That's a 3.7% drop in the stock. So taking a look at these three, we know what the stocks have done. We see the rises, we see the falls. But what would have happened had you have taken option positions in each one of these? And are there any surprises that come out of looking at these options? So this is an exercise for those of you that are new to options trading on what can happen to option prices when stocks actually move. To use this and to work this exercise, you're going to need to jump into some sort of tools that allow you to go back in time. Let's go back a week. So we'll go back to September 29th. We're going to look at an option scenario on each of these three stocks. Now we got to have some ground rules. And the ground rules I'm going to use is they all end in December. So let's just use the December 19th, 2025 dates as the expiration dates for all of these. And then we're going to run them to today. And we're going to look at risk and reward as where they were to date. So I go back and I look at, let's first look at NVDA. Now Nvidia, I can see here it's 181.88 as of this print. Oh, these are the Ocs. I want the December 19. Right? Let's look at December 19th. And in December 19th, based on where we are right now, we're closer to 182. So 182 is going to be your at-the-money call option, right? And I'm not recommending you buy an at-the-money call option. I want to show you what the at-the-money call options actually have done for each of these three stocks if you were to look at them as of last week. So did I do something wrong? I think I might have. No, I'm at 929. That's where I want to be. 929. That's February 29th. So if I were to look at this in terms of the stock, $14.40, and that is for the 182 call for Nvidia. Right? This is what it's going to look like. Right? Here it is at 1440. Here's where it is right now. So this is what you paid. All right, if you paid $14.40, now they're going for $7.15 by $7.30. You're looking at roughly a 19%, 19.5% return on that option. Remember, the stock went up 4.5%. Options up 19.5%. That makes sense. Let's take a look at our next one. Our next one's going to be APH. So APH, I go in, and again, I'm going to make sure I'm looking at December 19th options. Let me update that. And our APH was at $121.01. So the 120 calls are the ones that are at the closest to the money. Well, they're going for 9.5. So if you bought one of these 120 calls for 9.5, you're paying $950 for the option. What's it done since then? Well, here's your $950 options, $9.50. They're up 22%. All right, because the $9.50 calls are now $11.40 by $11.80. So up $210, 22%. Why is this stock only up 1.5%? And yet these calls are up 22%, but the Nvidia calls, where the stock was up 4.5%, were only up 19%. Why did these get a better return on investment? I'll tell you why. Because the implied volatilities rose more on APH than they did on Nvidia. Nvidia's implied volatility actually dropped, where APH's went up. And so if that's the case, volatility has a lot to do, especially with options that are at the money, because there's time premium in them. Volatility has a lot to do with the pricing of options. Now let's take a look at our third position, which was the loser. And the loser was Bank of America. And I need to go back to my option tables. Let me type in BAC. And again, I'm looking at where we were on September 29th. And I'm looking at the December options. So this has weekly. So I got to get down the page a bit. Update. And we see that based on a $52.42 stock price, that the 52 halves are the near money options, $2.59. So if you're buying one of those, you're paying $2.59, $259 for the option, right? So if we bought that, this is what it looks like. This is what it looks like, and what you paid for it at the time had about $3 of slippage, so that's good. But what's it done since then? And I'll just take you day by day on this last one. So plus a day, down $40. Plus a day, down $90. Plus a day. Now we're at the 2nd of October, down $99. And then as of right now, Monday, down $108 on a $259 position, down 41%. So what does this tell me? What does this tell me as a trader? Well, it tells me what I've been saying for quite some time now. Nothing is 100%. Okay? That means that we have a couple positions, 2 out of the 3 positions I showed you last week in the first week running. All right? First week running, we got 2 that are profitable. We have 1 that is not profitable. Okay? That's the first thing. The second thing I want to let you know is that there is no guarantee that the profitable ones will not become unprofitable, but there's also no guarantee that the one that's losing money right now won't turn around or will or won't turn around and be profitable. So what can we not control? We cannot control what the market does. All we can control is what we get into and how we get out of it. Okay? What can we do with this position here? Possibly, like I do with everything, I look at a mental 50% stop loss. Now, I'll do that on everything, but I definitely do that on call options. A 50% stop loss, and then I'll pull the position and let the other 2 run. Okay? And finally, these are December patterns. They run to December. I don't need to be too worried about what happens in the first week of a pattern that's going to run roughly another 2 months.